London AIM-listed metals exploration has recently hit a near four-year high in terms of its stock price. It operates the 100% owned Runruno gold project in the Philippines. It's just announced a new acquisition as well. Darren Bowden is the chief executive. He joins us on the line now from the Philippines. Darren, welcome. Exciting times. I'll get to the stock price in just a minute. But first of all, just explain more about what it is you're doing there in the Philippines, because for those that don't know the stock story, bring us up to date.
Yeah, the Philippines is our only operating asset. Metals exploration was listed 10, 15 years ago, and it acquired this asset, developed it, raised money in 2017. The asset went into production. It was a sad start. The technology wasn't working very well, and by 2019, when I took over, we were struggling to meet performance criteria. From then on, for the last 4 years, we've worked hard to build the asset into a producing and productive asset that's now doing very well. You would have seen the recent release where we're up to about I think it was 73 million free cash for 2023, which was a great year for us, and all performance metrics are being met. So we're a single asset company. We tried to keep our head down over the last few years because we didn't really have much of a story to tell, but now we're looking to move to more a growth story. I think it's worthwhile us putting ourselves out there so investors know who we are.
Well, let's pick up on that point, because I think this is the exciting news that I want to talk about in some more detail, because the Runruno project is now being joined, hopefully subject to a full deal that's coming. You announced the acquisition of YMC a couple of weeks ago. What does this acquisition mean? What is it about, and why are you doing it?
Yeah, so YMC provides a growth pipeline for MTL that meets both short and medium-term objectives. It's supporting the company, its vision to be a multi-producer, a multi-project and multi-asset producer. And now that MTL is ready and in a strong financial position, the consideration for Greenfield's company with the potential that YMC presents has made sense to the board. So the board has made the decision to move YMC into the company because it meets most of our objectives and gives us that potential pipeline going forward.
So, but why this deal, and why now particularly? Explain more about the fit. I mean, you talk about multi-asset. Previously, you've been a gold producer, but you're now going into what appears to be new areas.
It's primarily gold, copper, and there are some specific gold assets within the YMC portfolio. Basically, the board's position in 2021, when our debt was still at about 130 million, we were still in a position where the lenders had large covenants over the company, was that Greenfields was not where we wanted to be. We wanted to be in more brownfields. There was starting to become an enthusiasm within the board to move to mergers and acquisitions. But we were targeting brownfields and near production assets because we didn't have the time or the funds to go into a greenfield acquisition. 3 years later, the debt's in a very strong position. The company's strong financially, and YMC now makes sense to the board. And with the amount of targets over the project area, it actually adds to the long-term vision of the company and of the board. So that's why it now makes sense when.
Yeah, absolutely. How far down the road are you now to a full acquisition? Because I said you announced it a couple of weeks ago. There's still a bit of road to travel down before we get full confirmation. What do you expect to happen? And is it an easy road down to full completion of the deal?
It requires shareholder approval. We will have the debt paid off before we go to shareholder approval, and therefore the covenants that sit in the loan wouldn't be triggered by the requirements of the lenders, which gives us a little bit more flexibility, and therefore it is a shareholder decision to finalise the acquisition. And we're targeting to bring that to the AGM with a full circular and full details in May for the June AGM. And so
so
really the only hurdle at this stage is that shareholder approval.
yeah, so how do the financials look? I mean, you've taken on this debt to do the project. How has it changed things in terms of the balance sheet?
Yeah, look, at this stage, there's no significant spend or outlay for the YMC asset, which is great. Our balance sheet is very strong. The debt's now down to as of the end of 2023, it's at 20 million or just thereabouts. We will have that fully drawn down by end of Q2, called April, May. And therefore we're in a strong position generating cash. So it will give us the opportunity to develop these assets in a fashion that makes sense, i.e. we can spend rapidly on bringing assets that make sense into production. The benefit we've got with YMC, it's very close to our existing location, and we've got a lot of infrastructure in country. We've got a lot of expertise, technology, and by being able to look into the future, 5 years, when Runruno is not operating anymore, it'll be an absolute benefit to be able to repurpose those assets back into this country in a new project. So our medium-term target, 5 to 6 years from now, is to be able to repurpose the existing assets somewhere close by. And that's what YMC brings. It brings targets that match what we can do with the existing plant in the type of form and production rates we've got with the existing plant. And it reduces the capital bill by a significant number. But with all that said, the thing that actually makes more sense is time frame. To keep this company as a cash flow positive company, we need to be able to repurpose those assets quickly, and we need to be able to repurpose them effectively. And this is the opportunity to do so.
Yeah, as is quite often the case, of course, when a company announces a deal like this, there is a little bit of a softening in shares. Let's take a look at the share price chart, because I said at the top, you were at or around 4-year highs in the last couple of weeks. That's exactly what's happened. And if you look at this most recent performance, I guess this, to be honest with you, Darren, is probably something to do with a little bit of nervousness about this deal for YMC. You've laid the foundations to explain to investors in this interview precisely why you're doing it, which certainly seemed to be for a good long-term plan for the business. Just to explain more about what's been happening recently with shares, with this rise that we've been talking about. I guess it's all in the context of how Runruno has been performing. And I guess markets like to build in a future expectation. So clearly things were going well. Can you explain more about how Runruno's been going? You talk a little bit about now the longevity of the project, or looking at some point at which it's no longer going to perform. How do you feel about the next 6 to 12 months or so for the business?
No, I'm very in a very positive frame of mind, Jeremy. The business is running very well. We spent the last 3 years updating, rejigging the technology that was implemented here in Runruno and in the Philippines. And with all the work that we've done, we've now been able to match or outperform a lot of the initial design criteria that were set up for that business. So when we started, the project was running at about a 55% recovery. We ended at just under 89% for 2023. Each of the different circuits is performing extremely well. Throughput, flotation, BIOX, CIL, and when we add all that together, especially with a long call on gold, because the market's calling gold long, and that's great for us. We were a leverage business where gold price was driving a lot of our market movement, but at this stage, it's actually performance of the existing business. That existing business has 4 years to run. So it is using that cash flow that we are spending off that existing business to try and grow our share price for the shareholders is our primary aim over the next 3 to 4 years. And in the next 6 months, Runruno is going to keep performing the way it has been. It's doing very well. You would have seen the RNS come out yesterday that the business had a fantastic 2023, and that's going to lead us into 2024. We don't see any downside with Runruno, except the fact that we're looking for mine extensions, but there's not a significant amount out there, which makes this project pipelines even more critical for us.
Just one quick question. A lot of companies are experiencing a lot of pressure on the cost side. Do you see that coming through? You're talking about a higher gold price. Clearly, a company that sells gold into the market, you're able to benefit from the leverage position. But are your costs rising at the same time?
In 4 years, we've had a cost growth profile that matches about 1.5% to 2%. We have done extremely well when we took over this business in looking at our contract costs, our use of contractors, our current commercial trading contracts for purchases and supplies, and we've been able to reduce or manage those to a minimum change in our cost structure. And as you look, we've actually reduced our cost structure on a produced gold basis year in, year out. When we started, when we started, the cost was actually over $1,800 US an ounce. We're down at just under 1,200 now, and we've been able to maintain that number and reduce it over the last 3 years rather than increase it. So while you're absolutely right, there has been a lot of pressure on upward pressure on costs. Our whole focus isn't just about production and production metrics. It was about cost structures, managing the local suppliers, managing the local contractors, and being more efficient. And we've done that very well.
Okay, look, Darren, we'll have to leave it there, but thanks indeed for joining us, explaining more about what's happening at Metals Exploration. Good luck for the shareholder approval of the YMC deal. That's Darren Bowden. He's the Chief Executive of the London AIM-listed Metals Exploration.